Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 10th of September. All right, we come out of Friday's trading and US non-farm payrolls pretty much delivered. Now, if I just switch back to the data just quickly, just have a quick summary here. Now, we had pretty good numbers across the board. Now, there was a slight improvement, only 10,000 on the actual payrolls themselves. Now, that's not huge. The unemployment rate was as expected. So once again, you'd think the US dollar may tweak up a touch, but the really big mover was the average earnings. Okay, whether you're looking at the month-on-month or the year-on-year, the forecasts were 0.2, 2.7, and they sort of blew that away. So that's a real strong positive and gets the US dollar out of the gutter. Okay, it hasn't really, to me, put it in an massive upward bias, but it has got it off the floor. And just while we're there, just having a look at the Canadian numbers, were a complete opposite sort of picture. Slight blowout in the unemployment rate and the employment change much weaker. Now, the central bank, we've got a lot of information coming out this week. The Bank of Canada, I was going to say, is still very hawkish, okay, which means a lower dollar CAD or a stronger CAD. This number counters that, so it's back to a bit of a sideways trade. But on Friday, there was a bit of a trading opportunity there. Now, just actually, while I'm here, I'm not sure exactly what time the Chinese numbers came out. It might have been a bit of a reason why the Aussie sort of drifted lower and the Kiwi. These trade numbers, okay, weaker than it forecast. But the big change here is you're looking at exports versus imports. Imports massively through the roof compared to exports. And that's going to be a worrying sign for China. That means basically they're paying more as things go forward. If they're putting tariffs on the US, well, that's going to hurt them probably more than what the US is going to get hurt by the reverse. All right. Now, that sets us up for trading today. Now, let me just come back to the major pairs, just having a look at where everything's starting the week. One of the first things you should do is just, have a look at your charts. Don't try and preempt any sort of particular moves. We're looking for some signs of clear direction. Obviously, the Aussie downtrend, we had it finally breaking down through sort of 71.40. You've got to be looking to sell this on rallies. It's broken a long-term level, and he's looking for all money. Looks like it's going to go lower. The Kiwi in a bit of a barroom brawl here, down here around 65.30, but it is probably the one currency with the strongest bearish sentiment or strongest sentiment across the board. Central bank, dovish, economic data has been weak and it's breaking all the technical levels. So the Kiwi, still one of the dominating pairs to be looking for. It's a tricky currency to trade, but if you can get in and hang on, it should give you some cash. Dollar yen, okay, lots of talk about increasing trade tariffs on the US on China and China on the US. All that's happening is this thing's just gyrating around the place. It's back sort of mid-range to me, and once again, he's sitting on the sidelines. Now, the euro, just take a look at this. It has drifted lower with the strong US numbers on Friday. It wasn't a hugely easy trade. You can see it's sort of dancing around the trend line there. It has pushed lower, but overall, if you look at the picture on just a slightly wider time frame on the hours, you can see it's still sort of basically trading sideways. So I'm not bearish dollar or euro at this stage, but we're not far off. No one really wants to hit the sterling at this stage after the real positive. Brexit's all over the place, right? So we're starting to get some positive news out of the EU. There's mixed political situations there as well. So just keep an eye on this. It's a tricky trade, but we do have some major central bank action this week, which should sort it out. Dollar CAD, to me, it's really back trading sideways. Oil, $68. The weak data. Weak Canadian data and stronger US did have the impact of pushing this thing higher. I think, if anything, to me, there's a slight upward bias. But after the weekend where the currencies lose all that momentum from Friday, it is just trading sideways. All right. Now, let's just have a look here at what we've got here. Oh, there goes the dog. The US dollar, it is just trading sideways here at the moment. And if I just have a look here, we've got a bit of a level around 95, 40, just above 40. You might see the US dollar pop, but don't get sort of sucked into those US numbers from Friday. To me, it's still trading sideways. right? There's no major huge bias one way or the other. Dollar one, it like the numbers on Friday, and it is much higher. So that's a weaker one, which should lead to a weaker Aussie and Kiwi. Now coming into this is actually really important, because as you come into today's trading, right? If I just scroll down just a touch, we do have some important numbers coming out of China, right? We've got the PPI, CPI numbers. Now they're going to be very important. I would think it's probably still a fraction too early. We need another month of data and a month of these tariffs to kick in before we start to see an impact here. But the market, especially for the Aussie and Kiwi, will be watching this very closely. Any signs of weakness will be a good excuse or a good reason to start selling Aussie and Kiwi, and they are already in a bearish downtrend. All right, so this is where this is going to become a really good trading opportunity, particularly today. It's out in about 20 minutes, so you want to have a close look at the Chinese numbers as they roll out. All right, now let me just come back to coming into Monday. I mean, if you're looking across the board here, you're looking for some sort of reason as to what is going on. You come over to your news page and you do get the lowdown on a number of various things. Of course, the dollar rises, US dollar rises on solid US growth. And that's probably maybe slowed things down a little bit, the trade tensions. And then the rest of it, you've got sterling. No Brexit deal. I mean, Brexit. I'm sort of a bit over it, to be honest. And now we're going to start to see a lot of news here. Obviously, you've got OPEC. I'm surprised this one had trade tensions. I was going to say, isn't talking about trade tensions. But what we do is we are going to start to get a lot of focus. This is one of the biggest weeks for economic data and central bank activity. So coming to the MyFX Trading Hub, as I mentioned, we do have the Chinese numbers coming out here just under 20 minutes. So the markets at the moment, they are starting to get close to normal markets, but we do have a lot of geopolitical issues outstanding, and the market's just been waiting for Trump or China or someone to sort of say something. At this stage, nothing has really come through. So it's getting close back to normal markets, and this is good timing because we do have a lot of serious stuff coming out this week. If we start to look at the economic numbers, at the start of the week, a little bit slow to get started. Monday, Chinese CPI data, all right, and UK manufacturing production. That's going to give us a pretty good look at the general direction for sterling to start the week. Then you come into Tuesday, you've got the unemployment figures, but the average weekly earnings will be the major focus in sterling. You come into the US producer price index, another inflation number, important for the US dollar. Then it's really, you come into Thursday, and this is where it all goes a little bit exciting. Okay, we'll start with the Aussie employment numbers. Obviously, one of the first big releases on the Aussie dollar for some time. If there's any sign of weakness, that'd be a good trade, as we do have that clear bearish tone. Then you've got the Bank of England, the ECB. Okay, in amongst the ECB interest rate decision in their speech or the press conference, we do have US CPI as well. Now, this is right up there as one of the most important numbers that the Fed are looking at. So that's going to be huge. Then we've got Draghi will come out and try and tell us a bit more about what's going on with the EU. And then you've got some important Kiwi numbers, industrial production, a huge number for China, and then US retail sales. So like this week is massive, okay, in the big scheme of things. If you come back to the start of it, and I'm only showing you the numbers that I think are the most important, the very start of the week, okay, is nicely spread out. Obviously, sterling is going to be a major player with US and UK data. But, if you're really looking for serious action, come Wednesday and Wednesday onwards, we are starting to get into the real big, potentially trend-changing releases. And that's the central bank interest rate or central bank meetings. Bank of England, ECB, this is going to be very important. Now, the Bank of England does have a lot to consider with Brexit and everything else going on. But the ECB, they don't. They're just cruising. So we are going to get a chance for some really good direction here on the euro, that's for sure. So what I'm trying to say is don't get too caught up and get hung up on the short-term trading opportunities that may present themselves over Monday, Tuesday. They're probably good opportunities to throw some cash in your account. Once again, focus on the pairs. And actually, if I just bring this back up, this is probably reasonably important. Focus on the pairs that do have clear direction. Now, if you just look at the daily analysis snapshot, okay, this isn't really giving you detail about what's going on. You can click on those flags if you've got access and get more intricate details. But to me, the Aussie and Kiwi have clear bearish signals. Kiwi more so than the Aussie. The Euro is starting to flutter with the downside, and the US dollar is starting to flutter with the top side. But they haven't really given us full-blown signals at this point. And then you've got sideways activity on the CAD sterling, dollar yen, and dollar Swiss has gone back into a sideways sort of movement. It was bearish on Friday. So that's your main numbers. Now you look at that and you focus on the pairs where there's economic numbers coming out, and that's where you focus on your charts and work out where to get in and wait for these releases. Aussie and Kiwi starting the week on the back foot. I would expect these two pairs to get hit if those CPI Chinese numbers are weak. Dollar yen sideways. To me, I think we'll see euro sideways, but it has broken down on the hourlies there, so it's a little bit of a bearish tone, but it doesn't really want to go on with it. We may have to wait for the ECB or some of those US numbers. As I said, you're going to have some UK numbers. Now, check this out. The sterling's trading around 129.30. Mate, we've got almost 100 points on the top side and 100 points on the downside. This thing could go anywhere. So it's going to be pretty loose to start the week. So if you are trading and looking to get in around those numbers, make sure you do control your capital. Dollar CAD, well, it's steady as it goes at the moment. We'll have to wait and see how oil and Brexit or NAFTA plays out and all these sorts of things. NAFTA, obviously the main thing holding dollar CAD back at this point. All right, guys, that's it from me. Plenty to look at. Big week ahead, as I said, and I'm really looking forward to it. All right, have a good trade day, good week, and I'll see you in the live trade zone. Cheerio.